Hello guys, welcome back. Today we're going to look at shipping. I just did a Twitter recap video from different chart for the past week. Definitely go and check that out. So shipping, a sector that many are into. So I have like 20 charts for today that we are going to see if we can find anything good, if you can find a good trade, a good setup that you want to get involved into. This is the place to look at. So let's start up with the Baltic Dry Index, the BDRY. To me, we're still, ever since for the past 10 years or so, in this long-term cylinder here coming all the way up. You can see there we have the false breakout to the upside here. And what I'm focusing on right now is this channel here, where until we break to the upside, then it's no longer bullish at all. We need to break to the upside here. We have a 2% day today, so let's see. And if we break, it's my guess that we go all the way to the upside here again. So a big move actually from 1,000 to roughly 6,000 if we are that lucky. But again, we have to break the downtrend first. So yeah, let's see how it goes for the Baltic Dry Index. Boat ETF, I actually only have one chart or one line on this chart, which is this big support and resistance trend line. Basically, when we're above, in my view, that's bullish. Below, it's bearish. Especially if we bounce off and we go low, then you should wait for another entry. But still, we are below. Testing it again, you can see how many times we have actually touched it over the past 2 years, right? It's the biggest trend line on this channel, or on this ETF that I can find. If we break here above, let's go and zoom in here. Above roughly, let's put it, yeah, roughly 29, roughly in that case, 29, yeah, that would be a great entry, and you can have the stop losses below. So yeah, that's my take on both. The dividend is quite nice as well, 15%. So yeah, great entry with a decent risk reward setup when we can break above this 29-ish. The BDRY, the dry bulk shipping ETF. Again, I think this is the first impulse low, second, then third, we're breaking out of this wedge here to the upside, as you can see, which is a good start. But I think we are still very close to the lows from March 2020, that I wouldn't be surprised if we see this one getting closed. So we still have roughly 20% more to the downside in the worst case scenario, I think. Yeah, 23, 25%. But zooming in on today, you can see here, we are breaking out of this wedge here. That's bullish. But also still we are in a bear flag, right? So we need to negate that bear flag to the upside. But I think we shouldn't rush into anything right now, in my view. Still give it some time. Let's see what happens. It's still in one big downtrend ever since October 2021. So there will be a time and place for this. The CTRM, the customer marine time, the MACD has been this 0.4 level for the past 2 years. And this is the resistance you should be waiting for. So when we break, that's the entry. Until then, don't do anything at all. We can easily dip below here because, you know, the bounces are getting smaller and smaller. We had this spike here, which I think was a financing something, and then we went straight back down again. So wait for the break for CTRM. Until then, don't do anything. DSX, look at this one here. We have to zoom way out on the weekly. This is the long-term downtrend, 15 years back from 2008. You can see it right here. We have it all the way across, breakout. And now what is happening for the past 2 years, 3 years more or less, is this squeeze right here. So in my view, wait for the breakdown to short it if you want to short it, or to the upside if you want to go long. Again, the stops you can place quite easily. So the risk reward ratios is actually quite nice. Again, as long as we're in the squeeze, we don't do anything. We're getting to the apex, so let's see what happens. The 200 moving average is also coming here. So whatever happens here will be a big breakout, up or down. So this is a very nice setup that you should follow if you're into shipping. Easy peasy. Nothing much to say in my view. Still below these two here, the double golden resistance. And what happened today, I think, is a retest of this golden trend line coming down here. So if we see a bounce to the upside, then we can go higher. But still, from a long-term perspective, just wait for a touch at the bottom if you get that, or the breakout. Don't play it any differently, in my view. It's not the best setup, but it's definitely there. Frontline, I know many people like this stock. It's has done great, actually, ever since it broke the downtrend. You can see here back from 08 all the way down. We broke it, and then we had a lot of jitter here, a lot of retesting done, and now we curled back up again. As you can see, we curled all the way back up, and we did a big retest here of this pivot high over there. You also have some bidding there, and then we are hopefully resuming more to the upside here. So this retest here is very important, and we need to get more upside here to confirm it. But it looks good. It really does. The 200-day is also coming up nicely. So we are in an uptrend, no doubt about it. So more or less every dip should be bought when you are in an uptrend. Also 15% dividend. It's quite nice. You can have a stock that goes up and also gives you 15% dividend per year. That's nice. GLBS, Global Marine Time, been hammered down. It's a weird chart to me, so I will not spend much time on it. The only thing I can see here is that we have this wedge coming back from 2021. This one here, and into this smaller one here, and we had a fake out to the downside. And if we can break to the upside, then you'll get a massive shot to the upside here. So to me, if you want to somehow get into this one, you should wait for a confirmed breakout here to the upside, which confirms the false breakdown here. But until then, don't do anything. The downtrend is massive, and the spike you're getting here will be big, but also the pullback will be quite big. So this is a good trade, but also you could find a long-term entry here. It depends on how you want to play it. GOGL. We're going back here again 15 years. Compared to front line, it hasn't broken out. You can see here, we still have ways to go. Big double bottom here. And what's happening now here is on the shorter term time frame, well, shorter term, this is a 2-year head and shoulders with a bear flag breakdown here. So there's nothing bullish about this specific chart right now, unless we can, let me zoom in here again, unless we can break above this downtrend channel, going trend line here. If you can break above that and stay there for a week, 5 days, a week, whatever, and stay above the 200, then you can look for an entry upon the continuation. Whatever happens here, you can get the entry, but you need to get above and stay there for at least 3 days, 5 days, depending on your mood. I know Gareth Soloway has 3 days, or is it 5 days? It's one of the two. But for now, don't touch it if you want to go long. Again, that's my take. NM. Navios Marine Time had a big move here from the breakout, big move again, then all the way down. Then we have kind of a two-party setup here. We have this wedge here, which we have broken with a big breakout, and then some sort of retesting here, and then we are now trying to break this one coming up here. So the entry should be, in my view, if you want to go long for this stock, is to wait for a breakout above the 2.1, let's call it 2.1, confirming the breakout of the golden trend line, but also the horizontal level here. So 2.1 for this one is a quad entry, and you can place the stops below again if we dip back below the horizontal support, but also the golden trend line, which is coming down from there. So, but also note the 200 moving average is still coming all the way down, still sloping down. So yeah. STNG. Scorpio tank is also a big favorite of many people that comments on what chart that I should be looking at when we're looking at shipping. Again, this is quite similar to the front line to some degree. We have a big, again, inverted head and shoulders right here. Lovely, actually. Big breakout here, and now we have broken all the way up above this pivot high right there, which is a big level, and now we are retesting it yet again, and we're resuming up. So it looks very, very good. The 200 moving average is coming up. So we are in an uptrend, and every dip should be bought, in my view. Let's go to the daily just to show you the smaller time frame setup. That was actually the entry, the big entry. If you right here, it is. You can see it right here. The entry was July the 28th with the entry. The optimal entry for this one. So yeah, let's see. Let's quickly do the measured move for this inverted head and shoulders just to see where we are. Okay, okay. So we have still some upside to go before we are hitting this measured move here. So we still have from like 50 to 70. So it looks good. Again, this is one of the stronger ones, similar to the front line, looking good. As long as this one holds at 40, it's bullish in my view. TGH, weird chart to be honest, but you can clearly see this one going back 10 years at 42.50 roughly in that, roughly. You can see the massive resistance. And when we break through, that's an amazing entry, which you should be buying if you want to do it. Again, the stops can be placed just below, right? So if we have a fake out, let's say, for instance, we break out to the upside here. Again, we get a normal retest, which we will in this case, because it's such a massive support and resistance. So I suspect highly that we get a retest. And if we bounce up, then perfectly, then that's a long-term hold, a very long-term hold. And again, if we break up and we go back down again, then that's a fake out, and then we should wait for another opportunity. But then again, you have the stops right below. Don't buy here, and then when it fakes out, just say, I'll wait it out, because that's gonna sting very often. Just wait it out. It's better to just take the small loss and wait for the next. Maybe next time it will go again. So yeah, but this is a massive long-term resistance. Upon break, it will have a big move. Also, you can note the very weird looking but still valid cup and handle. Possibly, it's not the best looking, but it is still there and should be recognized with. So TNG, Tech Hay Tankers. This is a one-line chart, which is the golden trend line. You have it there, and then we have the small retrace, and then boom, retest, resumption. Stunning chart, to be honest. Let's see if we have. Yeah, this is a beautiful, beautiful, beautiful retest. If we align, it's fine, whatever. You can see it here clearly, you know, rejection, breakout, retest, resumption. It's beautiful. And then this is where you have the entry in my view. So if you can get above 44, 45, just to be on the safe side, 45 on a daily close, perfect. You have the entry. And then depending on how much you want to give it to the downside, you know, the stop loss, you can place it below this one here, or you can place it all the way below here, the major one. It depends on how you feel, but this is a big one if we can get up and break above that. But long term, overall bullish. 200 moving average coming up. First time in 10 years. Looks good. This one, TRTN, to me looks like that this is a bid that has come in, you know, a big bid, and then it holds the level at around 84. So to me, I wouldn't do anything because it looks like it has been bid on, and we are waiting for if they want to take the offer or not. So SB, a bit of a weird looking chart in my view. Again, I will just wait if I were to get in to break above the golden trend line. Just play it safe. If you want to play a bit more aggressively, you can do it on the wide resistance here at around 3.9. If you get above, you can have an early entry. But still, yeah, at around 4.5 if you get above the golden trend line. very bullish, and a big breakout. It's a 10, 13 year long breakout, so that should mean something, right? SPLK, the star ball carriers. You can see here the long-term white support resistance line coming across here, which is also a neckline in this case. We have the head and shoulders, and yeah, getting below, we can actually move it up a tiny bit right there. So we are sitting right here. So if we drop below here, it's a short. And again, if we can start to curl back up, then you can go long. You can go long if you want to do it a bit aggressively, but you need to have the stops below the neckline. But then again, you have the trend line coming down here. But for now, it's a perfect head and shoulders. So until proven otherwise, it's not a buy here by any means. Right now, it's only the 200 weekly that's holding it up. So yeah, Simsalabim. Also a chart that, or a ticker that many people like. You can see we have visited the IPO lows more or less, and we have this one here coming all the way down. So the entry, yes, you have guessed it, is above the white pivot low right here. There it is. You have a touch here, gap down, and if we can get back above, then that's your entry at around 16, in my view. Big breakout, big entry. Also a stock that does, right now it says 100% dividend. Maybe, but still the dividend is high for this stock. So look for the $16 level to get above and stay there for 3 days. Then you have a great entry. You can also buy the break aggressively straight on, but it depends on how you want to play it. But long term, this one could be one to hold for a very long time if you get the break. So GNK, excuse me, quite similar to the previous one. I think it was the SPLK, inverted head and shoulders at the 200 weekly. So getting below 12, meaning we will break the neckline. Again, that would be insanely bad for this chart. Hopefully, if you are a bull, you can curl back up again. But until proven otherwise, this is an inverted head. This is an head and shoulders in the making. And yeah, we should see how it goes. Actually, looking at the daily chart, the daily candles, if you want to go long, again, that's a big if. When we get above 14.6, more or less, you can go long on these highs here. And you need to have the stop below again at around 14 point something, depending on how low you want to go. But still, that could be an entry if you want to play to the upside, if you believe that's the case. But still, nasty head and shoulders. So, yeah. This is TRMD, Tom. Long-term, inverted head and shoulders this time and break upon the neckline. And now we have rallied up big time. I don't have any good ways of showing how it is here because there's nothing much to show, at least the way I look at it. One thing we could do is we can see how much it has retraced. It has retraced 42%. I would wait for a clear setup to get in here. The dividend is good, 25%. So buying a stock that is down 40% with such a big dividend can't be all that bad, but still, it's not the way I'm usually doing it. The NAT. Just look at this one here, by the way. Head and shoulders, target down here. It hit it more or less to the tick. Beautiful. This is a 25-year long target anyways. Short term, still, we are in a bearish wedge to the upside, which is, for now, the way I look at it, the right shoulder, possibly the right shoulder. And I think we'll break down here. That's often the case in the bearish wedge, of course. And then we should wait for a lower low here to go in if you want to. Ultimately, you want to wait for the break, as you have guessed it, the long-term golden trend line. So when we break here at around 6, if we do, then that's your entry. Until then, nothing much to do, especially not right now in this bearish wedge for sure. This is EGLE. Let me just align better here again. Head and shoulders in the making. We just broke out on the blue neckline here. We have the 200 weekly sliding up a bit here, grinding up. Again, wait to see how this one plays out. You could, if you want to get in, buy upon a possible breakout here of this trend line there. But still, for now, head and shoulders in the making, not the best. ESEA, excuse me, very long-term 15-year chart. This could be one of the best setups right now, in my view. Zooming in, you have the long-term downtrend channel here, all the way down, right? Bit of fake out down to the below, all the way up into a bull flag. Exactly, a bull flag. Let me zoom in to show you. An entry here, in my view, would be a quite easy one, breakout to the upside from this upper trend line of the bull flag, especially getting above the 23 level right here. Then you have a perfect entry, long-term bull flag playing with a big target. This is the from $2 to 40, so you have plenty of upside. So good risk reward. Again, you can place a stop loss quite easily below. Last one is Toro. It's only been on for like a few months, but still the setup is quite clear. We have the long-term support here coming up, and you had the horizontal white support and resistance here. So breakout, retest, resumption. Great entry here. As long as you are above the golden trend line here, you are all good, in my view. So yeah, do with this as you may. Again, obviously getting below the white support at 4.43, very bad, and you should exit your trade. That's the way I see it anyways. We covered like 20 charts, and I hope you liked it. This was the shipping recap, because I know many are into shipping, so I decided to do this one. I hope you liked it. If you find a trade, a setup, an entry, and you do well, I'm happy for you. As always, keep your stop losses in place. It's very important to do so. Otherwise, you will get wrecked, especially in shipping sectors and mining sectors and so on. You will get wrecked to the teeth if you don't do that. Hope you enjoyed it. As always, leave comments below. Whatever you feel like writing, I'm up for it. So, bye, guys.